What is accounting? Accounting is the process of reporting, recording, analyzing, and summarizing financial transactions. About accounting components, we have six key components which they are foundation of accounting and we need them to record and categorize our transactions. These six components are asset, liability, shareholders or stockholders' equity, revenue, expenses, and gain and lose. And now we want to explain them one by one. The first components, assets, describe all fundamental resources a company needs to generate future benefit. Assets include many subdivisions like cash, account receivable, inventory, prepaid expenses, equipment, and building. Remember, listing asset components is not by personal interest, and you have to list them from most liquid one to less liquid one. Like cash, we put it on top of the list because it is the most liquid asset a company has. Means you can access to it as soon as possible or on demand like banking accounts. So now what about the cash? As you know, the cash is like currency or coin or banking accounts, amount of money a company has available. The next definition is account receivable. Account receivables are customers' debt or obligation to a company for goods and services that have been delivered. Then we have inventory. Inventory refers to all products we have in our storeroom and ready to sell, or all the raw materials we use to produce the products. Then we come to prepaid expenses. Prepaid expenses are upfront or advance payment for some goods and services that we're gonna get in future, like prepaid for insurance or rent. And in brief, equipment are all things we use for production process like machinery. Now, after all these definitions, it's good to know assets are split up into two categories, current assets and non-current assets. Current assets represent all type of asset that can be converted into cash within a year. Remember the previous example about cash? Cash is an obvious example for current asset. The next one, account receivable, also is considered as a subdivision of current asset, and the reason is account receivable covers all short-term debt which will be received within a year. The next one is non-current asset, also known as long-term asset or asset which we use to generate future benefit with in duration of more than a year. Some subdivisions of non-current assets are property, equipment, intangible assets, bond and stock, and so on. Don't forget about listing rule for all type of asset, most liquid one to least liquid one. And the last definition is about intangible assets, which they are not physical assets, but they represent value like trademarks or copyrights.